The Alliance Playbook. How OPay used handshakes to build a fintech empire in Nigeria. Part 1. The Partnerships. You did not see that made OPay unstoppable. Here is a question that should keep every Nigerian entrepreneur awake at night. If you had $100 million to spend, would you use it to fight MTN, Visa, the banks, the government, and every POS operator in Nigeria? Or would you use it to make them your friends, OPay's friends? While other fintechs were busy writing Twitter threads about disrupting banks, OPay was in boardrooms signing deals with those same banks. While some startups said, "We do not need telcos," OPay was integrating with MTN and Airtel so a pepper seller in Zaria could fund her wallet with airtime. Result? In less than 5 years, OPay went from, "Who are these guys?" to, "Abeg, do you do OPay?" And the secret weapon was not just the green agents or free transfers. It was partnerships. Quiet, strategic, street-level and board-level partnerships that turn enemies into distributors and competitors into channels. If you are an entrepreneur, unemployed, underemployed, or learning how to build in Nigeria, this is for you. Because in Nigeria, who you know and who you work with can matter more than how much money you have. This is part 1 of our OPay partnership and networking case study. We will break down the first 3 of 8 principles OPay used to build alliances. We will compare them to what banks, other fintechs, and big companies did wrong. And we will pull out lessons you can use even if you are starting with just your phone and your hustle. Let us open the Alliance Playbook. Why partnership was OPay's real product? To understand OPay, forget the app for a minute. In Nigeria, infrastructure is broken. Power fails. Networks fail. Trust fails. If you try to build everything yourself, you will burn cash and die tired. OPay's parent company, Opera, already knew this. They ran Opera Mini, the browser that worked on 2G. They knew that in tough markets, you do not fight the system, you plug into it. So when OPay entered Nigeria around 2018, they asked one question: who already has the customers, the trust, and the rails we need? The answers became their partnership targets. 1. The Boda and Keki unions for ORide and OBUS. 2. The banks for settlement and cash movement. 3. The telcos for distribution and airtime to cash. 4. The market associations for agent recruitment. 5. The regulators for license and survival. While other companies were building apps, OPay was building relationships. That is why they scaled fast. Principle 1. Partner with the gatekeepers, not just the customers. In 2019, Lagos had thousands of Okita riders. You could have tried to sign them up one by one. Slow, expensive, dangerous. OPay did not do that. They went to the NURTW and RTAN, the unions that control the parks. They did deals. They gave union leaders revenue share. In return, the unions told their riders, "You ride. You pay." Overnight, OPay had thousands of riders. Not because the app was perfect, because the chairman said so. Explanation. Every Nigerian market has gatekeepers. In tech, it may be telcos. In transport, it is unions. In the market, it is Ialoja. In the church, it is the pastor. Gatekeepers control access and trust. If you win them, you win their people. If you fight them, you fight the whole street. Find your gatekeeper. Offer them value first. Commission, prestige, ease, safety. Make them look good to their people. Then your product will move. Compared to others, some ride-hailing apps came to Nigeria and tried to cut out the middleman. The middleman cut them out instead. Gokada and Max struggled with union wahala early on. OPay made the unions partners. That is why ORide spread like fire before the ban. Lesson for you. If you sell clothes, partner with the Tailor Association. If you do food delivery, partner with the restaurant union. If you are looking for a job, your gatekeeper might be the community leader who knows where the hiring is happening. Do not skip the gate. Principle 2. Turn competitors into channels. That's one shocks people. OPay partnered with banks. Yes, the same banks they were disrupting. Why? Because OPay needed bank transfers to work. They needed settlement. They needed CBN licenses. So instead of shouting, "Banks are dead," They went to First Bank, Access Bank, GT Bank and said, OPay became an easy on-ramp for those banks to reach unbanked customers. In return, the banks gave OPay API access, settlement speed, and regulatory cover. OPay also partnered with card networks. They rolled out OPay debit cards with Verve and later Visa. That meant you could spend your OPay money at any ATM or POS, not just in the app. Explanation. In Nigeria, competition wins. That means cooperating with your competition. You do not have to kill the king to eat. Sometimes, you feed the king and he lets you use his kitchen. Ask, who already has what I need? Can I pay them? Or share revenue, instead of building it? Compared to others, some neobanks took a we versus the banks approach. They have struggled with failed transfers, CBN blocks, and trust. OPay said, we plus the banks, and moved faster. Even PalmPay and MoneyPoint later copied the model. Lesson for you. You do not need to own the whole chain. If you bake, partner with someone who has delivery bikes. If you are a graphic designer, partner with a printer. If you are unemployed, partner with someone who has a skill but no marketing. Join forces. Share the win. Principle 3. Use telcos as distribution, not just as network. In Nigeria, telcos are more than phone companies. They are the biggest retail networks. MTN has more outlets than all banks combined. Airtel and Glo reach villages where no bank branch exists. OPay knew this. So they did deep telco integrations. You could fund OPay with MTN airtime. You could buy data at a discount inside OPay. You could dial USSD codes to use OPay without internet. That last one is key. USSD meant a farmer with a small Nokia phone could use OPay. That is 30 million Nigerians most apps ignore. Explanation. If you want to reach the mass market, ride on who already reaches them. Telcos, FM, CG distributors, fuel stations, POS networks. Do not build reach from zero. Borrow it. How? Revenue share. Telcos get a cut of airtime and data sold through OPay. So MTN is happy to push OPay because OPay pushes MTN. The partnership, not charity. Compared to others, many fintechs launched app-only. No USSD, no telco deal. They were locked out of the real mass market. Carbon and Branch started that way and later added USSD. OPay started with USSD on day one because they studied Nigeria, not Silicon Valley. Lesson for you. Who has the customers you want? Can you give them a reason to sell your product? If you run a small business, maybe the barbershop, the pharmacy, or the church can sell for you. Give them a commission. Make it official. That is networking that pays. What happens next? We have covered 3 of 8 principles. OPay's alliance playbook is deeper. In part 2, we will reveal how OPay partnered with regulators to survive bans that killed others, how they used market associations to recruit 100,000 agents, and how they turned agents into a loyalty network that competitors cannot copy. We will also break down the 3 biggest partnership mistakes other Nigerian companies make. Mistakes that cost them money, time, and sometimes their whole business. Nigeria is hard, but Nigeria is not impossible. OPay proved that with the right handshakes, you can build an empire. Your next step, if you want part 2 and want me to break down more Nigerian companies like USC, Flutterwave, Dangote, and MoneyPoint, subscribe to my YouTube channel now. I drop one deep business case study every week with real lessons for entrepreneurs, job seekers, and anyone building from scratch in Nigeria. No theory, just what works on the streets. Subscribe, turn on notifications, and I will see you in part 2 of the Alliance Playbook, where we show you how OPay turned the government from a threat into a partner. The U-100 War. How OPay built a billion naira habit, one agent at a time. Part 2. The 5 moves that made OPay unstoppable. You remember where we stopped. Lagos State banned Okadas in 2020. Already OPay's star product died overnight. Investors were shaking. Competitors were laughing. Everyone thought OPay was finished. Instead, OPay did something wild. They took the money they were losing on bikes and poured it into wallets. 2 years later, they were processing more daily transactions than some first-generation banks. How do you survive when your main product gets banned by the government? You already have your answer if you read part 1. You win the street, you remove friction, and you make one product sell the next. Now we go deeper. This is part 2. We will cover the next 5 principles OPay used to become the name you see on every market umbrella in Nigeria. Then we will call out 3 deadly mistakes other companies make when they try to copy OPay. If you are an entrepreneur, unemployed, underemployed, or learning how business really works in Nigeria, take notes. Let us get into it. Principle 4. Turn your customers into your salespeople. OPay figured out something simple. Nigerians trust Nigerians, not billboards, not TV. We trust our cousin, our neighbor, the guy who sells us bread. So OPay said, bring your friend. When they send their first money, we pay both of you. Sometimes it was 200 naira, sometimes 500 naira. For a student, for a trader, for an apprentice, that is lunch money, that is transport. Suddenly, every OPay user became a field marketer. People were shouting, download OPay, in church, WhatsApp groups, in school hostels, inside Danfo. Explanation. This is referral marketing, but Nigerian style. It works because the reward is instant and useful. If you want people to talk about your business, give them a reason that puts money in their pocket today, not points that expire next year. Start small. Bring 2 customers. Your next service is free. That is principle 4 at work. Compared to others, GT Bank ran big TV ads with celebrities. Kuda used Twitter influencers. OPay used your younger brother. Who do you believe more when it comes to money? The person who drinks tea with you. That is why OPay spread faster in age than in Lekki ads. Principle 5. Solve for the agent, not just the customer. Here is the secret most people miss. OPay has 2 sets of customers. The person sending money and the agent helping them send it. If the agent is not happy, your business dies. So OPay gave agents high commission on every transfer, on every bill, on every cash out. They gave them POS machines cheap. Some got it free. They gave them kiosks, chairs, and that green jacket. That jacket turned a hustle into a title. I am an OPay agent sounds like a job. Because the agent made good money, they pushed OPay first. If you walk to a kiosk and ask for transfer, the agent will say a payday, no charges. They will not mention the bank app that gives them nothing. Explanation. In any business where someone else sells for you, your real customer is that seller. If you sell hair, your hairstylist is your agent. If you sell Zobo, the store that stocks it is your agent. Ask yourself daily, how do I make my agent richer? If they're win. Compared to others. First, Money and other bank agents existed before OPay. But many agents complained of low commissions and slow support. OPay treated agents like partners. That is why you see 10 green kiosks in one market and maybe 1 or 2 from banks. Principle 6. Use data like gossip, not like a textbook. OPay watches the street. They know traders cash out by 5 p.m. So they make sure agents have cash before that time. They know airtime sells more on Sunday mornings. So they run Shine Ya Eye Sunday promos. They know salary week is the last week of the month, so app speed must be perfect then. They do not wait for quarterly reports. If transfers are failing in ABA by 9 a.m., the fix is happening by 11 a.m. Explanation. Data is not big English. Data is patterns. If you fry a kara, your data is people buy more when it is raining, and they close from work. Write it down. Do more of it. OPay uses simple patterns to make fast decisions. You can too. Start with a notebook. Track what sells, when, and to who. Compared to others, big banks have data centers, but decisions take weeks. Committee meetings, memos. OPay moves like a trader. See, problem, fix problem, sell more. In Nigeria, speed is a feature. Principle 7. Be everywhere. People feel pain bank app down on payday? I ran ads saying, transfer sharp, no stories. Post agent charging to 100 naira for 5,000? OPay agent said, our own na 50 naira. OPay did not beg people to try something new. They showed up where people were already angry and said, we have paracetamol for that headache. Explanation. The fastest way to sell is to remove pain. Do not create a new problem to solve. Find what people are already cursing about in their WhatsApp groups and solve it. Pain makes people act now. Education makes them act later. If you are new, sell painkillers, not vitamins, compared to others. Some fintechs launched with Save and Invest for people who could not even send money without stress. OPay said, send money first. Make we be friends. Then we talk about saving. Order matters. Principle 8. Build trust with speed, then with support. The first way OPay built trust was simple. It worked. Transfers did not hang like other apps in 2019. When your bank app said, pending, for 3 hours, OPay said, successful, in 3 seconds. The second way was support. It was not perfect. But they had Telegram groups. They had WhatsApp numbers. They had in-app chat that actually replied. When money got stuck, they reversed it. Fast. Explanation. In Nigeria, trust is built in seconds and lost in seconds. One failed transfer and mama will never use you again. So make your product work first. Then, when it fails, answer the phone. One good support experience turns a hater into a preacher. Compared to others, many banks had strong buildings but weak apps. Many new apps had strong tech but no human to talk to. OPay tried to balance both. And when they messed up, they said sorry with refunds. That is why people forgive them. 3 mistakes other companies make when copying OPay. Mistake 1. Copying the promo. Without copying the system, companies saw free transfer and copied it. Then they started bleeding money and shut down. Why? Payas free transfer was bait. The real money came from agent fees, loans, merchant payments, and airtime commissions. Free was the hook. The system was the profit. Lesson. Do not copy price. Copy the profit engine. If you do not know how they make money after the discount, do not run the discount. Mistake 2. Ignoring the agent economy. Some digital banks said, Nigeria is going cashless. We do not need agents. They forgot that cash is still king. They forgot that my auntie in the village trusts a human face before she trusts an app. Lesson. Nigeria is both online and offline. If your grandma cannot use your service, you have not finished building. Build for smartphones and for feature phones. Build for data and for real life. Mistake-free, moving slow, in a fast market. To become a bank agent, some banks took 4 weeks to approve you. OPay did it in 2 days. When COVID came, OPay added QR payments and no contact transfers in weeks. Some banks were still doing meetings. Lesson. Speed is a strategy. In Nigeria, the person who fixes the problem today eats. The person writing a proposal will eat later, if at all. Lessons learned. You can use this week. Lesson 1. Start where the noise is. What are people complaining about every day? Package the solution. Lesson 2. Distribution beats innovation. A good product with no agents will lose to an average product with 10,000 agents. Lesson 3. Make your partners rich, and they will make you rich. Who sells for you? How do they win? Lesson 4. Free is not a business model. It is an attention model. Know how you make money on day 2. Lesson 5. Trust is speed plus support. Be fast. And be human when you fail. OPay did not win because they are a foreign company. They won because they understood Nigerians better than Nigerian companies did. They respected the street. They respected the hustle. And the street picked them back. What is next in part 3? We will break down how OPay handled government, Wahala, how they moved into loans, debit cards, and merchant payments, and what their next big fight will be. If you are serious about business, you need to see it. So do this now. Subscribe to my YouTube channel. Every single week, I drop a new Nigerian case study like this one. No theory, just real moves you can use, whether you have 1,000 naira or 1 million naira. The Hamsin 100 war is not over. Subscribe, and I will see you in part 3, where we finish the OPay playbook. The Hamsin 100 war. How OPay survived the government, beat the banks, and is coming for your debit card. Part 3. Regulation, loans, and the next billion naira battle. Welcome to the final battle. In part 1, OPay took the streets. In part 2, they turned agents into an army and used free transfers like a weapon. Then something happened that kills most Nigerian startups. The government showed up. First, Lagos banned Okadas. Ride vanished. Then CBN tightened rules on wallets. Then new fintechs like MoneyPoint, PalmPay, and Kuda came with war chests. Then banks finally woke up and launched better apps. Most companies would die here. OPay did not. This is part 3. We will see how OPay survived regulation, how they moved from transfers to lending and cards, and what their next move tells you about where money is going in Nigeria. We will also recap the biggest lessons so you can use them on Monday morning. Let us finish the 100 war. How OPay handled regulation. Bend, do not break. When Lagos banned Okadas in 2020, OPay lost its flagship product overnight. Thousands of riders lost jobs. Billions in investment, wasted. Here is what OPay did differently from others. They did not fight the government in the newspapers. They shut or ride down fast, paid riders off where they could, and moved every resource to Pay Wallet and OPay Business. Explanation. In Nigeria, regulation is a constant. If you build a business that can only survive when the law stays quiet, you do not have a business. You have a bet. OPay built multiple bets. When one died, the money and team moved to the next one. As an entrepreneur, never have only one product. Have a backup for your backup. Compared to others, Gokada and Max fought longer. They burned cash trying to lobby. OPay accepted reality had pivoted in weeks. Speed of surrender is also strategy. Later, CBN said wallets needed BVN and tighter KYC. Many agents panicked. OPay rolled out tiered accounts. Tier 1. Small limits, no BVN. Tier 2. Bigger limits, with BVN. They educated agents and customers instead of losing them. Lesson: do not see regulation as the enemy. See it as a new rule of the game. Learn it fast, teach your customers fast, and keep moving. The move to lending and cards, from transfers to full bank free transfers get users. Free does not pay salaries, so OPay started phase 2. 1. Okash and Easymoney, small loans. If you use OPay well, you get 0 to 500 minutes. No collateral, just your phone and transaction history. 2. OPay debit cards, physical and virtual. Now you can pay on POS ATMs and online like any bank. 3. OPay Business, tools for merchants, invoices, inventory, business accounts. They move from serving individuals to serving the shop owner. Explanation. This is called land and expand. First, solve one painful thing. Get trust. Get data. Then sell bigger things. OPay used your transfer history to decide if you deserve a loan. Banks ask for 6 months statement. OPay already had it, compared to others. Traditional banks had data, but did not trust it. Branch managers still asked for guarantor. Kuda and Carbon did loans early, but did not have OPay's agent network to collect or verify. OPay combined data with street presence. That is why their loan loss is lower. The next battle. Who owns the market stall? Look around today. The green OPay umbrella is everywhere, but so is MoneyPoint blue. And PalmPay purple. The agent war is now 10 war. Commissions are thinner. Everyone has free transfer. So where is OPay going next? 1. They are pushing OPay Business to SMEs. If your shop uses OPay to collect money, do inventory, and get loans, you will not leave. 2. They are going rural. The next 60 million users are not on Instagram. They are in villages where cash is still king. 3. They are becoming the bank for the banked and unbanked. Teenagers, students, traders, SMEs. Anyone banks ignore. Your lesson. The war never ends. After you win customers, you must keep them. The best way is to solve their next problem before someone else does. 3 more mistakes other companies make in Nigeria. We gave 3 in part 2. Here are 3 more you must avoid. Mistake 4. Building for Twitter, not for trade fair. Many founders build products that look good in pitch decks. Clean app, nice logo, but their customer is at Alaba or mile 12 and does not care about UI. They care about, does it work? when network is bad. And will I lose my money? Lesson: test your product in the worst conditions. If it works in Ashodi with 1 bar of network, it will work anywhere. Mistake 5. Underestimating customer support. Some fintechs grew fast, but refused to hire support. When money hangs, Nigerians panic. If you do not pick up, they will call you a scam on WhatsApp. One screenshot can kill 6 months of growth. Lesson: support is not a cost center. It is trust insurance. Hire humans. Use voice notes. Speak pidgin. OPay did this early with local Telegram groups. Mistakes: raising money instead of making money. A lot of startups spent 2 years chasing investors. OPay raised money, yes, but they chased transactions every day. Revenue from agents, merchants, and loans kept them alive when funding froze. Lesson: funding is fuel. Sales is the engine. Do not build a car with no engine because you have fuel. The final lessons from the 100 War. Let us make this simple. If you are an entrepreneur, unemployed, underemployed, or on social security, here is your OP playbook. Lesson 1. Start with pain, not product. Find what people are already cursing about. Be the paracetamol. Lesson 2. Distribution beats innovation. A good product with no road to market will die. Find your agents, your partners, your street team. Lesson 3. Free is a tactic, not a business. Know how you will make money after the crowd comes. Lesson 4. Speed is law. In Nigeria, the fast beat the dig. Move, test, fix, repeat. Lesson 5. Trust is earned in microseconds. One failed transfer, one rude agent, one ignored message can end you. Lesson 6. Regulation will come. Build a business that can survive new rules. Have more than one leg. Lesson 7. Data is your friend. Even if it is just a notebook, track what works. Do more of it. Lesson 8. Never stop expanding. A customer you have today has another problem tomorrow. Solve it or someone else will. Pay did not have magic. They had discipline. They respected the street. They respected speed. They respected the $100 in your pocket. You can do the same. Your mission. After this, you have read all 3 parts. Now, action. Step 1. Write down one major frustration people around you have with money, transport, food, or work. Step 2. Ask, how can I remove just 10% of that pain this week? Step 3. Find one person who can help you reach 10 more people. That is your first agent. Do that, and you have started your own 100 War. Before you go, if this case study helped you think differently about business in Nigeria, I need you to do one thing. Subscribe to my YouTube channel. Every single week, I break down one more Nigerian business like this. No theory, no boring talk. Just real stories, real numbers, and real steps you can copy. We have more wars to study. There is the Indomie versus Dangote Noodles war, the MTN versus Glowdata war, and yes, the USC versus Everyone competition war you asked about. But I only shared the deep details with my subscribers. So click subscribe now, turn on notifications, and join thousands of entrepreneurs, job seekers, and hustlers who are learning how money really moves in Nigeria.